Hey everybody, so today I'm going to show you how did I trade London session today. It's super easy. The first thing I'm going to do is find my daily bias. I want to know if I want to buy or sell today. Next thing I'm doing is marking my support zones in the 1 hour time frame and above. Alright, so after that I'm going to the 15 minutes time frame to mark my liquidity zones. These are zones where price can hit, get liquidity to push up after. And last but not least, we wait for entry confirmations. Super important. Okay, so right now we are going to the daily time frame. You can clearly see it's making higher highs and higher lows, so it's bullish. Going to the H4, you can see it's clearly in a range in a bullish market. And finally, in the 1 hour time frame, you can see it's making clear higher highs and higher lows. So I would like to focus on that time frame. So my bias for today obviously is going to be buys. Why? Because we got two time frames that are correlated in bullish market. It's 2:45 a.m. New York time, 15 minutes before London Open, and I am marking my H1 support zones. After I got my support zones marked, I'm gonna go to the 15 minutes and mark my liquidity zones. These are zones where price can come down to get some type of power before pushing up, and you are about to see it happen. This zone is usually the last higher low from ancient session or something like that. Like this one that I am showing you is a clear higher low in the 15 minutes. It's the last one. I don't want to do anything. I just want to wait for price to get to the zone before I look for my entries, which is also located right in the support zone. Now you just saw price hit that zone perfectly. Now what I want to wait is a break of structure in the 1 minute time frame or 3 minutes time frame, whichever is making a clear lower height. In this case, it's going to be the 1 minute, since you cannot see it in the 3 minutes. Here in the 1 minute, you can see a lower high perfectly made, which appears to be broken. I will probably take an entry there, but not in this case. Why? Because we have to use a 30 pips stop loss, which doesn't make sense to me. I only like to use 15 pips as a stop loss or less, since I am entering in lower time frames. So because I'm not using a 1 minute lower high to enter, I'm going to use a 3 minute lower high. Now that our lower high in the 3 minutes is marked, we want to wait for a candle to fully print above that lower high. We want to see the body of the candle print. No wicks, nothing like that. We want to see the body of the candle print above. So here you can see liquidity was taken once again and rejected, meaning we got more power to push up right now. That's the way I see it. And right after, you can see that we had rejection on top, which was not a break of structure. It was only rejection, so I do not take an entry here. I want to see a candle fully print above that 3 minutes lower high. Otherwise, I will not enter. Now you can see that we broke in the 3 minutes time frame the last lower high, so I want to see a retest and an engulfing candle to enter. But I want to see this happen in a 3 minute support zone to help me with my stop loss. This is the first support zone. This is the next one. If I place a buy on the first support zone and my trade fails, I want to see price get to my next support zone and another 3 minute engulfing candle to enter. Otherwise, I do not enter. I don't care if price goes up right after or anything like that. I want to see price get to my zones. So I'm going to wait for this candle to be engulfed since it was the last yellow candle. But now we have a new yellow candle, meaning bearish, that just happens to be engulfed in our first March zone. So I'm going to take an entry. So now we're going to take an entry as soon as that candle is fully closed and engulfed. And as our stop loss, we're going to use our next support zone. Why? Because it's only 15 pips away. I like risking 15 pips or less so that my trades make sense when it comes to risk reward. As a take profit, what I like to use is the next liquidity zones or heights in the 15 minutes, 1 hour, 4 hour, daily or weekly. In this case, we can only see it in the weekly. That's the only place we can see a clear high, but it is way too far from our price. It's like 100 pips or something crazy like that. So I will just use 1 to 2 risk to reward as my take profit 1, as my TP1. There, I'm going to take like 80% of the trade in profit and then set my stop loss to break even, because the only way to get to the weekly high is by swinging, and I don't like swinging. So now that we have placed our trade, we want to see a hit at 1 to 2 risk to reward. Otherwise, we will not take any profit. And just like that, you can see the trade hit at 1 to 2 risk to reward. Right now, we just won twice whatever that we risk on the trade. So my stop loss is set to break even, and I already took 80% of the profit because I don't want to go see my trade go to my break even and not get any profit at all. And that's it, everyone. Have a good one.